Hello and welcome to Simplified. This is Chuck, one of your hosts. Last week, we spoke to Sameer Mohan on a lot of things: finance, investing, and that general universe. And the conversation was so enthralling that we decided to split it up over two episodes. It ended up being a fairly long recording, so we did split it up over two episodes to maintain sanity. And today is that part two, where we continue basically discussion in the same vein. If you haven't listened to part one yet, I would urge you to go back and do that first. Sets a lot of context and Sameer introduces himself and all that. And then come back to part two. If you already heard that, then great. Let's get right on with the show. Here is our interview with Sameer Mohan. I mean, there are so many examples of this, right? I remember whoever started the famous story of the guy who started Vanguard, the people who pretty much started index funds. That story of how he said he's going to beat the market by just investing in everything, how that became a thing. And lots of other examples. I remember this other stat, might be US centric, but might be pretty similar over here, where like 95% of all day traders lose money.
Yeah.
That absolutely blew my mind when I heard it. It might be 70, it might be 95, but the larger point, I guess, still stands. So, yeah, the only way to make money, it seems, in the long term, you 68%, right, in a year.
If you look at how the structure is there, it's your day traders that make money for you. And this is me speaking in perspective of a Fisdom or a Zerodha. So, as much as I want people, I want the day traders to come in because these are the ones who are today using the trades. See, the jobber and the whole system of going into the ring and BSE is gone. अभी जाके सिर्फ वो दलाल स्ट्रीट वाला बोर्ड का फोटो खींचो, Instagram पे डालो, right? Like everyone has like terminals sitting and they're doing in portals today. So the more trades that happens, think about it. It's the day traders who not only are bringing business to you, they are also subsidizing the cost of those people who are buying and forgetting or who are in the other ecosystem. So it's these 5% who are actually doing good karma somewhere. So even though they lose money, they'll get it.
So just to conclude on that, and with the day trader angle also, like when I got interested in the markets, I went very quickly from being noob to kind of like obsessed with the whole thing, and so taught myself technical indicators and tried to get into day trading, which obviously was tragic. And I was trying to do day trading in the volatility of 2020. All right. So at that time, I was basically trying to learn how to drive a car by driving a Ferrari. So that was crazy, but in its own way. So I lost some money, got some crazy money, lost more crazy money. And then afterwards, when I was going through this, the one other random ideology that I picked up from somewhere by seeing a bunch of people was, I kind of use this as a philosophy, is that if it's the investing philosophy is boring, it's probably profitable. Right.
Well said.
Right. And so, which is what I also said, that what is the way? So I started getting into derivatives and I was like, what is the most boring way to make money on derivatives? And then I learned about option selling. Right. So I was like, this option selling means you sell it once, you wait for a whole month. At the end of it, you will get one chindi premium. But that premium ka percentage of profit is 90 to 95%. Right. I was like,
this is excellent.
So I was like, this blows my mind. Like, it's boring, but it makes money. So I was like, so now
brilliant. So I'm going to improve on what you just said, and I'm going to sort of bring a best of both worlds sort of approach. And this is definitely not investment advice. The thing with investment right now is become very sexy, right? These star companies are going to make me a lot of money, and people think that that's going to happen to the next penny stock that they buy. So what I do is put most of my money in boring things, like you suggested, maybe not going to the detail which you have, but in a nice, safe mutual fund, your usual companies that you know are not going to go bust and all. And a small amount of money, and I write this off completely for entertainment, I invest in some random things that could go either way. At one point of time, this used to be for me Delton. I have no idea why I invested in this company or why I decided to pick it up. I think I just read somewhere that Delton is planning to do casinos offshore or something like that. I thought, okay, that seems like an interesting business. And I tell you what, I still cannot recall whether I made money out of that stock, but it was so entertaining to follow for 6 months because you never know if it's going to go up 10%, down 10%, bankrupt the next day. I mean, it was such an entertaining stock to follow. And I'm sure that's not a adjective that too many people might use, an entertaining stock. So yeah, I think that's let's hope Aether is not that, doesn't turn out to be that, doesn't turn out to be that way.
Speaking of true entertainment, though, I am not supposed to trade anymore because of regulations. Yeah, because because now Fisdom became a full service mutual fund platform. We have a stockbroking, everything. So no, we wrote all anti-money laundering signatures and all of that. So if I had to,
how do you do this then? Like, I mean, I'm assuming you were a fairly prolific investor, or at least decently invested person. So do you have to give up your investments and stuff?
Yeah, so the procedure is whatever holdings that you have across our competitors come into our basket. Obviously, they just move through Fisdom. It's a very cumbersome process through the central depository agents. Very ironically or unironically, the portal is named Easiest, but it's a cumbersome process. Yeah, it's called Easiest. I don't know why. It took like 4 days, a lot of phone calls, shutting down accounts and all of that. Now, once it's in, the process for us is you have to give a letter saying that, hey, I want to place a trade here. And you wait for 7 days for the regulator to approve.
Oh, wow. This is going back to Naren's era of the jobber.
You are, no, a jobber is fine. You are sitting there in 7 days. You are thinking, oh, I have done all of this. I have done all these numbers. Pakka pata hai ki this is going to shoot up. In that 7 days, you are sitting on the fence thinking, at the 7th day, am I going to get it at the right rate? What if it falls down? What if it goes up? What happens? What is that? And that fear kind of doubles when you're withdrawing your money. So what I've done is my entire stocks portfolio is now written off. It's fairly ungodly amount considering a middle class, upper middle class kind of family, but I've written it off. I've said, boss, this is not happening. Only once I officially come out of this whole loop, I'm going to get that money back. So, and this had some of the most colorful stocks that anyone can imagine. And I think I held IRCTC for the longest time and it's still there. So you can literally imagine me sitting there going like, boss, what is happening? And you can't take action on it. It is sitting there and it's going to shit. But yeah, I mean, that's how the rules are, because unfortunately or fortunately, this is good advice for our listeners. People have misused this. People in power, especially anchors, there's a certain section of people who've used it as a pump and dump scheme to increase their portfolios, increase their standing, and then they just sell it and go. And then they'll make a killing. It's either as an option trade or on the stock itself. So as someone who's an employee, the least we can do is we can guard ourselves and, do all of that. But yeah,
and that's actually
it is adventure for me.
No, but that's a great segue to the other aspect that I wanted to talk about, which was, I mean, one thing that was there, and I think watching a piece by News Laundry on how financial news sites work. And the one aspect, I think it was a financial journalist who was talking there, I forget his name, but he was saying that, see, all the news sites, the TV news sites that work on finance and stuff like that, it is a rare day or a once in a blue moon that they will actually say that a certain stock is not going to perform well, right? They are incentivized to constantly talk about people getting more and more people into the market because their business model works on that. So they are irrespective of, I mean, even if you were to take like with archival footage of the times when the biggest crashes have happened, they were still probably telling people to buy at all points of time, different kinds of shares at all different points of time. So most sites are actually incentivized by not just by like say external powers, but by their very business model to incentivize people to buy more. Because if you're asking people to sell, someone sells and then stops coming to your site, right? Stops coming to watch your channel. I mean, sell your entire portfolio and go away. Okay, bye. I'm never going to see you again. So that's how that particular model works. But the question I wanted to ask you as such, and as someone now in the content creation space in some way, where with the, so you guys at Fisdom are creating like these podcasts and these educational casts like Wealthcast and all these other things. And you're going to be part of like this particular creation business. We've seen like this huge explosion of all these content creators right now. So like someone like even a Tanmay Bhatt has a finance channel and all of these different guys are coming up with different finance channels and all that. So what do you think are the biggest implications of this particular phenomenon? And what are the biggest like say positives or or drawbacks?
Yeah, I'm gonna actually say opportunities. Like in this whole content creation space, like what are the like especially in a market like India with those numbers that you started off with, right? And the huge gulf in under penetration and all that.
I want to build some context before I get into this, right? And I'll take it from a mutual fund perspective. So, if you're aware, there's this thing or like a consortium called AMFI, which is Association of Mutual Fund Companies of India. So, AMFI, here's how this goes, right? Like every rupee that you insert in a mutual fund is converted to your units. There's a net asset value. There's a few basis points. There's a few expenses that is built in the mutual fund, depending on its nature, right? One of the very curious items that not a lot of people notice, and this is there in your statements as well. Go back and check. There is a 0.1% or a point not one basis point that is reserved from your SIP or from your investor lump sum for investor education. So
Right.
here's the context.
Oh.
If it is 1,000 rupees that you have as an SIP, right? Now that comes up. Now, if I'm saying that one basis point, so depending on the day market or depending on the percentage, 40 paisa of that 1,000 rupees goes towards investor education. So you are paying 40 paisa today to ensure that everyone, this is AMCs, this is distributors and RTAs like us, and this is content creators like us, because investment information is imperative. AMFI has gone on board. They've just plastered all the ads saying mutual fund, sahi hai, all of that, right? Similar with SEBI. SEBI has investment initiatives that does. RBI does investment initiatives. So this is the universe that we operate in. So there are basis points that is assigned that you as an investor of SIP are contributing towards. And this is great. This is the brilliant stuff that you contribute for nation building that a lot of people don't know. And this is the positive impact that you are having. Now, in this arena and this area wherein there is like a lot of under penetration, why is there under penetration in the first place is why you have to ask, right? It either comes down to lack of information, which by lack of information, I mean I'm trying to draw a parallel, but you're trying to separate the wheat from the chaff. Sorry for the graphic, this one. But the lack of quality information is what bugs you. Two is how distributive or how accessible that information is today, right? Like, to give you a very simple statistic, I mean, there are all of these campaigns that we are doing. There are all of these, influencers, TikTok reels, Instagram reels for India. I mean, because TikTok is banned. A lot of people who are there who are financial influencers who are saying that, we should do this, we should do all of that. And yet, you have like around 75% Indians investing in real estate. Why? That is your opportunity and that is your scope. That 25%, how do I build that and how do I divert towards other assets and say that this is what's going to deliver alpha? That is the opportunity for content creators. We find ourselves in a very unique position with Fisdom. I mean, our business model is directly dealing with the banks because we understand that banks is a place where default trust comes in. So we partner with the banks and we give out our collateral. We say that something as simple as the document, the prospectus, which is very, it's very verbose, but I have gone through a lot of these. They have to be designed with. There are some key takeaway points. Those key takeaway points are what a lot of our content focuses on. Let's say today, I'll give you an example, very bad example that I told in front of a large AMC manager, and he was like literally laughing. He's like, "Yeah, can you make better examples?" So he said,
AMC was large or the manager was large?
AMC was large. So
clarifying.
There's that video is still there. So I said, he was explaining an index fund to an audience, and I said, basically, dude, this means that ya to aap log copy kar rahe ho, and then you are being rewarded for copying someone, because he was trying to explain tracking error in an index fund. So I said, copying legal hai, but aapko theek hai. So it's things like this that we want to get to the people. We want to tell people that, okay, this is the content that you have to clarify for. And what is absent across the whole investment space, and this is, take crypto, take MF, take gold, there's real estate, there's stocks, is that personalization at scale doesn't happen, right? Like for me, my goals are different. My goals are YOLO, my goals are take travel, take exotic car, blah, blah, and all of that. I have friends who really come to me and say that, boss, we finally moved to Bangalore. This was our longest time goal. Abhi bas zindagi mein settle hona hai. Which means three things: roti, kapda, makan. They're still at the first hierarchy of needs. Roti and Kapda, they are figure out smart individuals, but Makan is a legit big goal for which they have to begin with a lakh and they stay there for a few years. So what's the approach for these guys? I have someone like my father who's retires at 60, 65, whatever. Now they have a corpus. What do they do off that? What is the goal for them? How do they get money back? What about women? Women today earn. I mean, you've been seeing the numbers. Women participation is reducing. So, how do we improve women to come in to the system and for women to understand that there are financial products are not it's not brain food, or it's like that whole hangover movie when this Zach is doing all that mental math and all of that. It's not that. It's actually very simple. So how do we build that? That is some of the problems that content solve. That is the opportunity. The downside per se is you inadvertently sometimes push ideas that are not palatable at scale.
Sure.
Right? Like, for example, I'll give you the greatest example. Don't invest in FT. Right? That is the most common line that's parroted across, right? Don't invest in FT. For good reason. Yeah, you are getting negative returns, inflation is real, blah, blah, and whatnot. But you need to first understand who's this person who's investing in FT. Is this someone who really wants money parked for something? Or is this person who's trusting the banks or trusting the people, or does it someone have real reason for keeping in the Nifty? We miss the context. So it just becomes like fortune cookie gyan saying don't invest in Nifty. Don't buy a car on loan. Arey bhai, your car depreciates 10% every year. If you just go and plonk like 10, 15 lakhs, that's like a loss of asset. You would rather have an EMI running, take the EMI amount or of certain 50-60% of it, put it in an investment arena, and that returns would cover for you in the 7 years. You don't say that. You say, loans are bad, don't buy. Loans are bad, don't buy loans. Don't buy house. Don't buy house. And the greatest of them all is, if you would have spent the 300 rupees this month on ordering on Zomato, investing in Zomato stock, you would have been here. I am like, boss, people's lives are important. They have to live. Sustenance नाम का चीज है. आप ये जाके अगर आप बोलोगे कि this is investment advice, then people will start dying of hunger, dude. So understand the context where you're giving this gyan and then tell it to people. So personalization and this needs to be at scale. That is the opportunity. But that line is a very thin line in the sand and people can get lost in that. So yeah, that's my concern about this whole influencer thing. And fair disclaimer, we work with a lot of influencers. I have fun working with a lot of these guys because you sit with them, you talk to them, you know that boss, मुझे पता है आज क्या हुआ, ये है वो है. You have behind these guys are humans like you and me, man. So I remember we had this competition where everyone, we made them tell the whole mutual fund disclaimer. And I think I clocked the least in both English and Hindi. So like that's my takeaway. So we're like having fun. These guys are as human as you and I can think, but you need to understand that context. Everyone is different because India is a vast country, dude. It's not a one size fits all nation where even investment advice has to be different for different states. So yeah.
Wow, that
long
was
answer.
like,
long.
No, that was fascinating. I was hoping that you wouldn't stop. Actually, this is like fascinating here.
No,
I want to ask
this connect back to Srikeit's points that usually the best options are the most boring one. How do you spice it? How do you sell asset whatever index mutual fund to someone who wants to buy Radhakrishna Cement? It's like, I'm going to be a billionaire tomorrow, and for an index mutual fund, I have to wait for 3 years or 2 years or something like that. So yeah, it's a job. Yeah.
All right. I hope you're enjoying the episode so far. We're going to take a little bit of a break and we'll see you on the other side. All right. Back to our conversation with Sameer. So Sameer, while we have like shat a little bit on people who got into like the market right now, burnt their fingers, whatever, but make fun of some people who claimed to be finance gurus on the back of having ridden an artificial wave in 2020 and all that. Do you think like overall, like, and again, just going back to the theme of this conversation, which is look at things long term, do you think that overall this might be a blip and a lot of people might have lost money? Sure. But do you think overall it might end up being positive because a lot more people are just getting interested in the market? A lot more people are aware of things like this. Like, sure, with some penny stocks crashing, and I mean, there will be names that will become the Radhakrishnan Cements of tomorrow. But does it overall become a positive thing, because at least people are now, that underpenetrated number, it might be 5%, has at least become 7% of people who are aware that, okay, stuff like this also exists. Is that a trend you're seeing? Is that optimism that you see in your industry?
Absolutely. So I'll give you a good example for this, and I go back to another IPO example that I'll give. And this is some on-ground work that I've seen. So when the LIC IPO was afoot, right? So one of the mandates that was given to these agents, who are commonly your relatives, who come and say, "Hey, beta, you started working, take this policy," and all of that. I have taken policies. I've actually poured through LIC documents also. I don't serial books. If I don't get books, I pour on this stupid document. So I've ended up buying the LIC documents, reading fine print. Some of them are good. I mean, but of obviously discretion and all of that. So one of the mandates that was given, and I can verify this because even the person who sold me the policy reached out to me, and they said that, "Beta, do you have a Demat account?" I said, "Yeah, I've built a Demat product." So he's like, "Oh, nice." He's like, "I've been a part of a team who built a Demat product, uncle. Yeah, tell me what's up." And he's like, "Oh, beta, nice, nice, nice." And then he told that, "Listen, you know what we are doing? We are actually helping people create Demat accounts." I'm curious. Okay, why? What is this? So he said that because LIC's whole IPO had this section that was reserved for policy holders, and policy holders were getting a 60 rupee discount on the IPO price, right? So they said that, we'll get people to create a Demat account. So the first question I asked them was, okay, so what are you telling people to convince that this is Demat account? They said, this is a chance that they can invest in LIC. They know that a lot of people have trust. They know that LIC can go this. Nice fancy presentation that LIC had shared, and which was working. And even we did campaigns. So we did campaigns saying that, listen, if you're a PAN holder, if you have a PAN and if you have an LIC, just link the two together, you'll get the 60 rupees discount if the shares are allotted. So you can see the level of advisory that has reached the streets about DMATs as a result of one IPO, one concentrated effort, and people are like everywhere. The people are saying that, okay, you get a DMAT. Now I have curious people saying, hey, mutual fund kya hai yaar? I've seen you on the video. It's very interesting. How do I start investing? Unfortunately or fortunately, mutual funds have an entry barrier at 100 rupees. Stocks, also similar stocks. Most stocks are discount brokerages. Fisdom isn't one. We charge 300 rupees if you sign up as a stock. Our mutual funds are free. Zerodha also has a 300 or a 350 charge for account broking. But you have discount brokerages who waive that charge off for you. So there is a certain barrier to entry. But the people who cross this barrier are generally curious, and then they ask, okay, kya karna hai abhi? We want to know more about this. And this is where a concentrated effort has to happen from not just, say, YouTube videos, from not just, say, the mutual fund sahi ad, or Rohit Sharma coming in and saying that timing ke jagah time spent in market is important. Very nice point.
I remember.
I mean, he took that literally and made like 2 runs of 13 balls. I mean, RCB almost crashed out because of that. And oh, sorry, I thought we were in bits and pieces for a moment. Okay,
well done.
Yeah. So considering
that's
all
the
of
markets you're talking about. The markets are in bits and pieces right now.
I can't comment unless I lose my job.
Yeah, sorry. You're putting Sameer in a tough spot.
I'm just kidding. Yeah. But you need efforts like this. And this effort begins by telling what it is, right? Like, it doesn't begin at showing ads which say, "Arey yaar, ye to ETF catch tha." I'm sitting in the and that's the biggest drawback about marketing and advertising of mutual funds, right? They're all literal. If it's a balanced advantage fund, they'll show one fat guy, they'll show one slim guy on a seesaw, and they'll say, "Beech mein balance hota hai, balanced advantage fund."
It's like the same stock images are also used by.
Yeah.
I have seen presentations, and my first feedback to these guys are, listen, can we do this a little more gracefully? And I've gotten feedback, and there are people who are like very. See, that's the other thing. It comes at scale. It comes at personalization. So that is my hope. People are coming in. Now people are asking them questions because And again, I go back to another anecdotal story. I work out of Mysore, which is my in-laws place, at least for a quarter. There's good weather and all of that, away from the stupid Bangalore traffic. Go visit a bank branch on a weekend, right? And you have at least 5 to 6 people coming in asking them, I have money and I want to invest in mutual funds or I want to invest in these products. Where do I invest in? You have people coming in, and this is organically done without any effort. So the crowd is ready, we are ready. The in between is what we need to figure out, and that's an interesting problem. It also comes back to this solving for the 5.5 crore, 6 crore number. You get this holy communion, right? And I also want to plug in something here because, and this is sort of, I mean, please don't construe it as investment advice, but one good way to approach this is before you even get into investments, have your shit settled.
Yeah.
Have like a certain money that's kept aside saying, boss, something happens, I'll keep it aside. Or at least have like an insurance. Then get it. Some people don't do that. Some people unfortunately take loans. That's not kosher, man. Let's not do that. So yeah, that's my hope. And it's growing. It's growing. Anecdotally also, and also with the numbers, we can see, right? It's a proper hockey stick that's not plateauing anytime soon. And these numbers are public. AMFI makes these numbers public. SEBI makes these numbers public. So you can go onto their website, of course, on PDF. So it takes like some 3-4 heads to bring it down to nice little presentable graphs. But it's not going down anytime soon, for sure.
Wow. That was fascinating. I genuinely don't know what more to ask.
Yeah. I mean, I'm like, at this point, I think we can pretty much continue on for like another hour also. But I'd say at this point, like that's what. So I mean, when I look at this and overall, I mean, because I have been geeking out about this so much now, obviously the moment, and that's the other phenomenon that's very common in India, is that if you take any interest in the markets and you come to a place where you're no longer saying that I don't know anything about the markets, you are suddenly the finance expert of your family. Right. And at which point, every Tom, Dick and Harry, uncle, aunt and their child will crawl out of the corner and come and ask you for investment advice. And also, the worst part is, okay, asking for investment advice, fair. But when that advice is either badly carried out or does not pan out, then you are blamed for it. And I'm
forever.
Okay, you are, this one is making losses in the market now. And I'm like, okay, man, what do I do about this now? So, yeah. So, I mean, that's an entire interesting phenomenon, just understanding how Indian attitudes towards the market are.
Yeah, there's an entire book waiting to be written on just that. I have one.
Like the very famous book is called The Intelligent Investor, which is one of the basic books of this thing. Indian investing book would be called a Sentimental Investor.
The Sentimental Investor. Wow.
So that would be more accurate. But
I have one final question, and this actually I've been wanting to ask for a while, and it's a very basic question. It's regarding mutual funds actually. So quite honestly, why don't we see more interesting mutual funds? And by that, what I mean is, every asset management company seems to have the same kinds of funds, like top 100 or this thing, index fund, whatever. And again, I'm not saying this from an investment advice or even growing your money perspective, but why don't we have funds that are slightly more, slightly different or themed in a slightly different way? Like once I joked about there should be a Sachin Tendulkar mutual fund just with all the companies that he endorses. And it seems like companies like Small Case are doing stuff like that, just having a specialty chemicals basket where you do the equivalent of mutual funds, which is you put 20K, 30K in a particular sector you think is going to go well. And I think, hey, why haven't mutual funds done something? Why is there no specialty chemicals fund or something like that? I know it's a question I should have asked a while back because we're, towards the end over here, but yeah, just a question.
So, I mean, yeah, like you said, I think one aspect which I do see is, like you said, the specialty chemicals. The other one is, which I think Small Case has been doing for a while, is following certain investing philosophies. Like they have
correct.
They have a can slim investing basket, and they have different investing philosophies that they isolated shares on and have put money in. So that exists there. But what I mean, like that Sachin Tendulkar basket, that sounds very much like a Dogecoin kind of approach.
Like, I'm not even talking about whether it makes financial sense. My thing is, why doesn't stuff like this exist?
You're saying meme baskets.
Meme baskets are, some draw. Like if you see a hardcore fan of Sachin Tendulkar will put money in a Sachin Tendulkar mutual fund. Forget about whether it makes sense or not. My question is, why doesn't stuff like this exist? Or is it because none of them make economic sense?
I have an answer for this.
Go on. Yeah, you're probably better place to say this. Yeah.
Because I got my fingers burnt on this. I went on the record asking a fund manager this. And then we had WhatsApp chats from their compliance team saying, oh, please don't ask about future-looking funds. Please don't ask about this. We are not supposed to say and all of that. So I'll tell you this. Fundamentally, one is investor protection. And so you do realize that if a fund beats the market returns, it's called an alpha. If it copies or with it, it's called a beta, right? Essentially, at the core of a mutual fund is to deliver that alpha, right? But if you look at the numbers historically, and trust me when I say this, India has already done different kind of mutual funds. You can only see that because you are doing that. I have invested in a fund which was purely on the automotive sector, and very recently I asked someone from that fund asking, "क्या हुआ उस fund का?" He's like, "आप अभी invest करते हो उसमें?" Like the fund is asking me, because that's a fund that's not been able to beat returns. That's number one. Number two is, if you offer variety or if you offer theme, one needs to understand that themes are extremely volatile, right? Like, for example, let's take the small cases specialty chemicals basket. Now, today, specialty chemicals are either dependent on the import-export, which means that they have a direct impact on the fiscal deficit of our nation. Import means there are certain restrictions where they get it from. 3, crude oil prices will also affect them because transport and essentially, processing and all of that. So you see how factors and all of this is dictating themes and saying that driving towards a certain volatile this one. And the composition of these funds are essentially equities, right? They cannot invest in, say, an overnight fund that says, I'll keep it parked for here, or some government bond or something. They'll have 100% exposure to the whole theme. So in such a scenario, what will happen if something major crashes, right? You stand at risk of losing your potential, you stand at risk of losing your principal, which is why that whole stupid thing, right, which says market fund, market exposure, and that whole disclaimer. And very interestingly, I don't know if people know this, you cannot invest in a US stock market today if you have a mutual funds, because people have breached the limit. For the longest time, US stock market funds, international funds were these Sachin Tendulkar of MFs, and they delivered, right? Like they didn't cop out in the 90s or like go 4 all out in 2003, right? Like they delivered. But unfortunately, because of regulations, they beat the 1 billion limit that RBI had. So fund houses themselves voluntarily said, no, we are stopping. Only 2 or 3 funds today, if you see in the market, can invest in that. So that's how it is. Unless you deliver the alpha, you meet the expectations and the regulatory channels. However, promise is there. I have myself seen a lot of funds and a lot of themes that are coming in. EVs are the most dominant one, green energy. Clean tech, basically, which is called as ESG. So ESG companies are all being bundled today, and there are MFs there. So it's happening. Slowly, in a couple of quarters, you will see some themes or some Sachin Tendulkars emerging. But the only disclaimer then becomes that, do we actually invest in this? Because there is a significant risk of losing premium. And it will be aimed at this aggressive, Srikeit types or my types profile. It will not be aimed at every Tom, Dick and Harry. So I'll just put it at that. It's in the way.
Wow. Okay. One, thanks for the explanation. And 2, that was needless shade thrown at one of our...
So he is an aggressive investor. I mean, think about it.
Yeah, he definitely is.
I mean, I'm telling you guys that I'm going for options which I'm selling, which I'm doing like, which I'm putting money and I'm like,
hold my beer. Neither of you bought Radhakrishna cement. Okay, just
and certainly none of you invested in the wrong item. So let's all agree that all of us are like reckless at some level, except Sameer, who is not allowed to be reckless, just like how Naren is not allowed to have ice cream.
So as we conclude the episode, I think one final time to bookend it also, let's give the disclaimer at the end of this episode also. None of the crap that we have talked about today, I mean, especially if you have truly followed the conversation, you wouldn't anyway. But if you haven't and you've just been listening, like you've got some kind of like filter where you're only listening to stock names and stuff, do not invest in these things.
Yeah,
just because we're saying
that 0.01 from the mutual fund fee does not come over here. So
we don't get any money for any of the advice.
Nothing.
Nothing. So please, let's put that disclaimer out
there.
Yeah,
but if you see a Radhakrishnan Cement stock somewhere, just convert it into an NFT and send it to Naren. Because the gratitude that you will get is more than any...
or if you can take printouts.
We will then record Naren's reaction and sell that as an NFT.
Is that Simplified episode 200 by any chance?
Oh, we're well past that now. But
my numbers are off today for some reason. Episode 300.
Done.
Done.
This has been great, Sameer. Thanks so much. Because I mean, I'm going to struggle to put a title to this actually, because it felt like just a conversation, 4 people talking about investment, 3 people talking about investment mishaps, and 1 person saying, whatever. You clarified some questions we had. No, this is pretty nice. So thanks so much for coming on once again.
Yeah. So
thank you so much, guys. I mean, from listening to Simplified on the Bangalore Metro to actually being here is like a big goal. So that's that's my alpha today for.
And we will be your betas. Work out as well as I thought it would. Naren, please sign us out.
Yes, please, fast.
Stay safe, stay invested, and stay
invested. Yeah, that is an easy one. Nice.
Yeah,
well done.